The major advantage for recognizing candlestick patterns, such as the dumpling top, is so that you can be prepared for this type of situation where if we're starting to have a big breakdown, that you can comfortably look for short positions and also comfortably look for short positions that are setting up to where they haven't produced big profits yet, but are preparing to produce big profits to the downside. For example, NVIDIA had a good sell setup. A shooting star, doji, gap down, left-right combination, closed below the T-line, another gap down, came back up and is starting to roll over. Even though you're toward the oversold area, if you can see the market is starting to sell off, this is where you're going to start seeing hard selling in a stock. Because where do most people sell? They panic sell at the bottom. So the longer a downtrend persists, and it looks like it's going to keep going further, the bigger the profits will be when these daily trading days get bigger in magnitude on the way down. And this makes recommending and holding short positions from patterns that we recognize, like the slow rollover. There was your doji, followed by a gap down below the T-line, and now with the market heading down, you've got big percentage moves to the downside. And the same pattern can be seen in IL, where you've had the dumpling top, you had your left-right combo below the T-line, and now it's starting to break down. If the market is breaking down, this one could also have substantial moves to the downside, big percentage moves. And our recommendation to short panel, PANL, was highlighted by the left-right combination, closing below the T-line. A lackluster day below the T-line, a day that they came up and tested the T-line and failed. Did a doji, which also told us that they were going to move it in the direction of how they open it after the doji. Use the T-line as resistance one more time before it started to fall apart for a 13% gain. Stochastic still heading down. There could still be more downside. Looking to fill this gap down here. I say still could be more downside if the markets keep rolling over and do a fry pan bottom, or a dumpling top breakdown. Then the stocks that have dumpling tops are also going to be breaking down. This is not rocket science. This is just merely interpreting what the charts are telling us and taking advantage of where the big price moves are to the downside. That'll be it. We'll see you in the chat rooms.